Hello and welcome traders, welcome to MarketWise Traders. This is another video that we've got here to help you in your understanding of the markets and in your trading. So today what we're going to look at is the Forex market. So this is most traded market, so this is where we're going to look at it and see what is the Forex market all about, how do we enter it, and that kind of thing, and it will help you as well. Okay, so the Forex market is the largest terms of daily trading volume in the world, and that's why it's got the most liquidity. This estimation is now actually more than 4 trillion because of inflation, but at the time when I did this lesson it was at 4 trillion, but I tell you it's a lot more. That's the amount of money which circulates a day in the Forex market. Okay, so you can see this is where the most money is moving in the world. All right, so since the market is made up by participating banks, which we also call institutional traders, they offer bids for a particular currency. If you want to buy a currency, if someone wants to buy US dollars, they can buy using another currency, whether it's euros, pound, or yen, all that kind of thing, and vice versa. So it's just like all markets are, it's based on supply and demand. So what makes the Forex market so unique is that there's such a large volume of trades that flow through the system. So it's difficult for any one person to influence the price of an entire currency. You understand this? So this helps to create some form of transparency in the market for investors, which have got access to the market, isn't it, to interbank dealing, because banks basically are the ones who will be doing the buying and selling of these currencies, especially for large multinational companies and the like. So most important, you have to understand, it's not like oil, for an example. If we've got the OPEC, the oil organization for petroleum exporting countries, if they decide to say the price of oil should be at so much, they can kind of like influence the market. But with Forex, it's not the same. Even if a nation tries to say their currency is worth so much, the market will determine to say, no, your currency is worth so much, not what you determine it to be at. So it's not like a commodity. This is what makes it so unique. Okay, so now in entering and trading the Forex market, like we saw when we dealt with CFDs, the previous video, anyone who has got access to a broker that's willing to offer them an account, they can enter and trade the Forex market. So it's traded 24 hours a day and 5 days a week. So it starts in Asia, that's Australia end, and it ends in New York based on the time of the day, right? So there's major centers, that's Sydney and Hong Kong, Singapore, Tokyo, that's the Asian side of things. And then we've got, of course, the London session and the Europe side of things. That you've got your Paris, Frankfurt, London, and all that. And then the market closes in New York, right? So it's Monday to Friday, and it's 24 hours, Monday to Friday. That's when you can trade. So there's 3 major trading sessions based on the time which I just explained, and most of the activity happens during these times. Why? Because that's when people are up, and that's when people are busy checking the markets and placing trades. So the Asian session that starts from 0-100 hours to 700 hours, that's Central African time, GMT plus 2. And the London session, that's from about 8 a.m. to 4 p.m. 1600 hours Central African time, or GMT plus 2. And the New York session, which I say starts around 2 up to 11, that is GMT plus 2 or Central African time. So those are the sessions when the markets are most active, based on those 3 sessions. And normally it's between this London and New York session where we see more volatility. Okay, so this is all about the Forex market. So you can enter the Forex market and realize that it is the most liquid. So at the same time, it's also very volatile, because there's a lot of big players in there. You can see learn more about this in all my other videos on tips and tricks of trading and the market makers and all this, because that's basically where people say there's manipulation, but it's actually people who buy and sell in large volumes, which moves the market. They do it together, the banks work together, and then it's sort of like seems to be manipulation, which is just basically them using their money wisely and getting what they want. So you just have to learn how to follow what they do. So there's other markets where we can also trade contract for difference the same way that we trade Forex, and they're also easy to be accessed and can be traded with most brokers. So indices, most brokers, they offer this alongside the Forex. Major ones which are often traded is NASDAQ, Dow Jones, the US indices, as well as even the Japanese and all those other indices, German, whatever, the futures. You can all trade them there. Most brokers offer these indices. Also, there's volatility indices, which are offered by what was called binary, now deriv.com, and there's a few who are following the trend of this broker, which I myself am not a fan of them. Like I'm saying, question marks can be raised on them, because one of these indices, any day they can just tell you this index is no more there, or we're doing an upgrade. So basically you're supposedly trading against some volatility or whatever they say it is of the market, but basically you're just trading against the computer, and each time they change the algorithm to make more money. And yeah, so those, it's not as such. Of course you have got many traders in there, so in a way the market is still working, but it's not for me as real as our real indices and real Forex, because any day they can just say we've taken this pair off the chart, you can no longer trade this index, whereas there's no way you're going to find someone saying the NASDAQ is well, anything can happen, but it's more unlikely that they'll say you can no longer trade pound versus dollar or NASDAQ, or you can no longer trade gold, because those are assets which will always be there. But with these guys, these brokers who just create these indices, they can just vanish any day. So shares and stocks as well can be offered by some brokers. Yes, you can trade it on CFD, or you can actually buy the stocks. It's all the same, but with that one it's more of a long-term thing if you're getting into stocks. So although you can also trade them on short term like CFD, contract for difference, but that's why we go for Forex, guys. Okay, so that's why we go for Forex. So how do you trade CFDs? This is what we will look at in the next video. So I hope this has helped you, and you can see why we say let's go for Forex. All right, so thank you for watching, and just be on standby for the next video, and good luck with your trading.
Learn, then earn money online. You control your money. You control the risk and the reward. Start from as little as $10. Stop losing to get-rich-quick scams and pyramid schemes. Learn a legitimate skill of online trading. Already a trader? Stop donating to brokers. Become independent. Stop relying on signals and careless account managers. Learn to trade the market maker way. Take our course and follow the rules of big banks and smart money. Get wisdom. Get understanding. Get wealth. Contact MarketWise Traders today.